Today, I want to touch on investing in a diverging world. I've focused a lot in the last several calls on the U.S. I want to talk a little bit more about the emerging economies and what's going on there and how it's all kind of connected in the witch's brew we have kind of developing here. But since the Fed and other central banks acted back in March of 2020, we've been very positive on the US and the global economy, but primarily the US for two particular reasons. One, we had great cyclical strength due to the fiscal and monetary stimulus that was massive. And I've said repeatedly, it's now over 50% of our GDP is what we committed here. Europe did something similar. Japan is even higher. China is doing different types of much more targeted stimulus, but the major economies were really supporting that. And then you add to it the secular opportunities of the digital transformation and other climate transformation, the opportunities that are going to come from all that. So while the secular themes remain very much intact, we are starting to see some strains, particularly in the emerging markets over the last 12 months. China has their own issues, but a lot of Latin America has some real challenges. So I want to take you through some of those. But I think this cyclical strength that we had is starting to start to decline and fade, and we're going to start to see more and more challenges coming as we shift policy regimes right now. The global slowdown has been underway. I mentioned the emerging economies have been tightening for some time. That's going to continue, but they're also getting hit with just higher global yields on the short end. And also you add to that stronger inflation readings and higher oil prices, and it's not a great setup for them. So let's take a look about where we were and where we're going. So this is from last summer from the IMF. They projected that global growth would be strong last year at 6%, but declining by over 1% this year. And you can see how this was broken down. This was in July of this year. And if to take it further to go into regions, this is what the IMF was projecting. And that would basically give you a global economy of moving from about 87 trillion in 2019 on its way to almost 95 trillion last year, going up to maybe 100 to 102 trillion this year. So still strong growth, but very uneven. And I think one of the challenges that you're going to see is big slowing in China and in a lot of the Latin American nations. And then in other areas, it's going to be very mixed. So fast forward, I just saw a report from the World Bank that came out last week, and they've changed their numbers. So shifting from the IMF to the World Bank, different numbers, but similarly directional. Global growth is decelerating, and it should continue for some time. What are the factors impacting that? Well, obviously COVID. The change in fiscal support is a big one. We had, I think, 55 emerging economies have central bank tightening actions last year, all while the US was still easing. It's pretty safe to say now that the US was too stimulative, probably for a little too long. On the monetary side, because of the fiscal stimulus that came in, if we're only doing the monetary, it probably wouldn't have been too much, but we were moving towards a time to change. When you added the massive amounts of fiscal stimulus on top of that, we think that's created some pretty interesting dynamics on the inflation side, and that the Fed was not fully factoring in. And now they're starting to unwind. At the same time, it looks like our fiscal policy is going to slow down if they get anything through at the Build Back Better program. So there is still risk, and that's going to push more strains onto the emerging economies.
I'm about to call.
Welcome, Jack. When you look at some of the emerging economies here, you see some different headwinds. They have a healthcare issue that's carrying through to their vaccination challenges. You have some really bad monetary and fiscal policies coming at a time that they really can't afford it. And what that's setting up for is challenges if there is a hard landing in any of these countries. The governments don't really have the wherewithal to step in and pull them out again. So that's going to create a challenge. And the big challenge is the economic scarring when you have a decade of challenges. I'm going to show you some numbers on this. But they really don't have much room to work against their problems from a fiscal perspective. They're in a bad spot from a monetary perspective. And the more the dollar strengthens, the more expensive their dollar-related debts get to service, which puts more strains on them, on top of deep gender and income inequality issues that are promoting more populism, which creates some changes in policies which move them off and kind of waste the money that was put out there. And then you add to it, the climate challenges are creating all sorts of distortions in commodity prices, which throws them off from their core program. So it's really difficult to set up a long-term recovery plan in emerging economies when the governments are changing, when the needs are so different, and when you're really a victim to the leading economies' policies, how that works out. So let's take a look at where they were and where they're going. And this is a kind of a fascinating look at the average growth rates by region for the decade of 2010 to 2019. That's what the diamonds are. And you can see that very few places are at or above those levels. So you have, basically South Asia, the emerging economies were surpassed that last year. And I'm sorry, EAC is the other one that's out of whack. But you can see so many places like the Middle East or other areas, Latin America, that are still far off from getting there. And I think East Asia and the Pacific, you can see the biggest gap there. That's a real issue of how do they get back to pre-19 levels. This is the scarring that we're talking about that's going on. If you look at it differently, the gap to get to pre-pandemic levels for their GDPs is still quite high. And that's particularly high for the sub-Sahara Africa and the South Asia markets, but also Latin America as well, and the Caribbean. So we have some real challenges for the emerging economies to get back. And a lot of the policies of the developing world are creating even greater strains on the emerging markets. So that's one of the challenges we're going to be faced with. And climate is a big part of it. So this is the first year that the percentage of countries in these regions will get to pre-pandemic per capita GDP levels. And this is saying that we got a real issue for a lot of these people, won't be getting there till beyond 2023. That's where the economic scarring comes in and why it's so hard for some of these countries to get out of their situations right now. This is another look at vaccination, how many doses they've secured for the regions. Then it's their courses that have been delivered and the numbers that are fully vaccinated. And in some areas, they got pretty decent rates, but in other areas, it's terrible. And this is part of the inequality. And you add to that a weak healthcare system on top of it, and you get systems that are overwhelmed in countries that don't have great finances to support it. And you get this kind of perpetual cycle that's creating bigger divergences, which is a real issue. And that's led to debt to GDP worsening. And while this is a bad picture, it's actually the worst of this is with China. China, I think, has had among the leading nations one of the largest growths in their debt to GDP of anybody. So I think that's something we're going to have to keep an eye on. And fortunately, China is very good about managing their issues for themselves. And I think they're very proactive in that right now. But I think we're still going to see the fallout. Was it maybe they got a little over their skis? That's going to slow down global growth considerably with China going down. The question is, can the US step up and fill the void? The other issue that's really a big problem for a lot of the emerging economies is commodity price movements, because they're either takers or makers of commodities, and which side they're on will determine whether they're benefiting or not. But as the global economy slows down, I think we're going to see in a lot of these areas a slowing of the commodity price increases that we've seen, and even starting to see declines, except maybe in the areas that are so keyed towards the digitalization process that we've talked about and the transitions that are going on. So I just want to switch a little bit to the rest of the world and really focus on Russia, Europe, and the Ukraine. Clearly, the market's pricing in some problems here. What the probability is seems low right now, but it's hard to tell with Russia. The West might be more forceful in their response than Russia's counting on, hoping that Europe kind of slows down the US. But if we denied Russian banks access to the SWIFT system, that's going to be that will hurt in a big way. The question is, can NATO get fully behind it? In particular, where's Germany going to come out on this? And I think that's going to be one of the interesting dynamics at play with the transition from Merkel to new leadership. How does Germany fit in this? They've been very close to Russia on one hand, and how that plays out is something we're going to have to watch. We're already starting to see strains with energy inflation in Europe. I think that's going to continue, and I'm going to show you some charts on that worsening. We think it's going to disrupt trade in the West if they do move in, and that's going to create some even greater strains on the European prospects. And I'm wondering right now how well the European institutional makeup from its original design is going to be able to work through the problems that I think are coming for the world going forward. And that's always been one of the issues we've questioned about the European project is, do the institutions match to the nation's needs and the conflicts that are inherent in the governing institutions for the EU versus the country's needs are at odds. And we think that's going to worsen. And I think that's a big challenge for dealing with the Russian threats. And I think that's one of the things that Russia's really focused on taking advantage of. If they do cut supplies as a response, we're already seeing problems there. But one of the things that we are hearing is they might not act till after the Olympics because they don't want China to be upset with them for disrupting a signature event for that nation. So that may push things off a little bit. Just quickly on oil, which is moving up, and Goldman came out with their announcement that they could see $100 oil. Oil is a global market, but when you look at natural gas is very local, and that gets to the transportation issues with it. But look at the blue line is European natural gas prices. The red line is the US natural gas prices, and the divergence between the two just shows you the fragility that we're facing right now with that system. So I do think we're really seeing this going to continue to be a problem for Europe and for their leadership. And you're starting to see shifts in divides there. And the role of NATO is one of the governing institutions that we have to see. Are the governing institutions set up post-World War II structured to deal with the current world problems and world dynamics that we have? And I think there's got to be some rejiggering of them to get them to work right. And it's going to be particularly important for the emerging economies as we come out of this. So, our views haven't changed much. We are cognizant of the emerging economies, but we focus more on the US and its impact. And we do most of our investing with US stocks, so that's not going to be a challenge. I think there will be some really interesting private opportunities in a lot of these areas, particularly in the themes we all know and love and talk about all the time here. But I think some of the traditional industries are going to really be challenged in a lot of these emerging economies, and also in Europe right now. I think there's some real issues going on. We see the US driving global growth, China worrying about themselves, and really not caring as much about the rest of the world right now. They'll care more when they solve their own issues. We're still going to have good growth, though, and that's going to be the thing that people have to keep an eye on. But the unevenness of it, I think, is going to be the challenge. And I've said this for some time on these calls, but I think there's three inequalities that we have to deal with all the time. We have country inequality, we have company inequality, and then we have the individual inequalities that exist. And all three of those are, I think, worsening. And I think they're all things we have to deal with. But from an investment perspective, you want to be really careful. And there's been a lot of talk about value versus growth and growth versus value. I don't think that's the right way to look at the world right now. And I think for investors, we have to be very careful not lumping all high multiple stocks as problems and all low multiple stocks as great opportunities. I think that's going to lead people down a bad path. Even with rates moving up, we think they're going to remain historically low. And as the US moves up rates, that's going to put more pressures on the other economies as it'll attract more money into the US, which we think will have the effect of mitigating rates over time. So not an easy market, one that's easy to get whipsawed in if you switch your focus all the time. We view it as focus on the secular growers with reasonable growth prospects and revenue, and that's the place to be for the foreseeable future. So, Mark, I'll stop there and open it up to comments.
That's great. I do, well, any quick comments, questions?
I have a question. So thanks, Stephen, for the overview. I appreciate it. I had a question about I thought it was interesting how you were talking about the inequalities on the 3 levels. And I was interested in how you're measuring individual inequalities.
Oh, we just use the standard mess that the government uses. But I think it's really, I think they're looking at per capita as much as anything else, but I think the real inequalities there start with education. And we've all known that, but in the US, depending on the part of the country you live in, the source of funding for the schools could be property taxes and whatnot. And that just by design creates massive inequalities. And we're not really working to solve them very well right now. So we look at education as one of the big inequalities. We are following the numbers and the metrics from gender and age and all that. We look at the multiple levels of that. So I think we're not doing anything different there, but I think the challenges are worsening. And I think the other thing is culturally in a lot of these countries, the starting point is so bad for women and others that, I don't know how you can solve them cultural issues without major changes in these countries. So,
can I just pick up on your question, Aaron? Because I wanted we had MLK Day yesterday, and I asked Chance Patterson to join, who's with the King Center. Chance, are you there? I don't know if you can come off. There you are.
Good morning.
Good morning. Good morning. So, Chance he may not introduce himself this way, but we were roommates in Cleveland, and I come back, and he's like employee number 6 at. Were you with XM or Sirius? I can't remember which one. XM. And then he later was Oprah's right hand on the communication, and now he's helping the King Center on communication. So if there's ever a person to reflect on MLK, it would be you, Chance, among an elite few. So you just heard the question about inequality. Maybe just how do you see things today, 2022? In light of Martin Luther King's legacy.
Well, I think Steve was right. I mean, I think until we make until we shift priorities, I mean, our theme this year for the King Holiday Observance Week at the King Center has been shifting priorities to create the beloved community. And the beloved community is this concept of, if we are bent on the path towards justice, creating a just, peaceful, humane, and equitable society, an equitable world, that would result in the creation of the beloved community. And, to even begin to take steps towards that, and where we would have that equity and that equality and the access to education for all, and eliminating hunger and access to healthcare, all those things that we would want for everyone. We have to shift our priorities. And I think, you said it right, even with the education system in the US, as long as it's based primarily on the property taxes that are collected in the areas near these schools, you're going to have schools that are, much higher quality than others. And so, we look at it as if, if MLK was able to get the Civil Rights Act of 1964 passed and the Voting Rights Act of 1965 passed, in that era, where, although as dark as it seems now, it was darker then. Certainly, we can get the Voting Rights Act passed again here today. Certainly, we can deal with the systemic inequalities that we all are very aware of and we see every day. And as he just discussed, ultimately, the greater economy and greater society loses when you have these inequalities, when you have these inequities, because you have a significant population that isn't able to reach its full potential. And so, that's what we focus on. How do we create large scale change? Not protesting in the moment. We're not a single issue organization. We are looking at society's biggest problems and saying, okay, what is the strategy as a nation, as a community to deal with them?
Hey, Mark, I've got a question for Chance, if it's okay. This is Rob Colorina.
Sure.
Yep.
Sure.
Chance, just, your points are well taken. Can you speak a little bit about your funding, meaning, post social unrest, or just sort of more historically, has funding and, sort of voluntary engagement, those type of things, has it been steady or has it been volatile?
For the King Center itself?
Yep.
No, it hasn't been steady. It's grown in the recent years. Certainly, I think, in some ways, this whole notion of training people in the strategies of nonviolence, was not clearly articulated. I think it was hard for corporations to get their arms around it, but we've done better in recent years. And I think certainly the George Floyd and BLM phenomenon has, opened some eyes and said, this whole notion of civil rights and social justice, this isn't some utopian fantasy concept. This is actually real life. Like if you could teach people how to cope with each other in a way that's nonviolent, if you can work through how to navigate tough conversations, those are skills. Those are life skills. Those are workplace skills. Those are leadership skills. And so the corporations in particular are becoming more interested in investing in those types of skills. And we happen to be, very good at helping people apply those skills and doing it in a way that's scalable within these organizations. So that's a long way of saying, the world has kind of come back to us in a way where it's not just, I'll be a little impolitic and say, for instance, the BLM movement, that was really a lot of protesting, right? But they didn't have a legislative or policy strategy. How do you translate the marching into changes in law, right? And that's a big deal. I mean, you had a lot of people who were very upset and very committed, but where did it go? And that's not a criticism. Yeah. I'm saying, we're helping these organizations, we're helping these companies figure out how do they invest in social impact and invest in social justice to actually create an outcome in policy and law and in the behavior of their staff. So things are, we could always use more funding. We just launched an online version of our training for the first time. That's called Nonviolence 365 Online. So that'll be a way to reach more people. But it had been choppy for a while, yes.
Yeah, and just the quick thought there, and Steve, you may have bigger thoughts. The integration to ESG, I think we have to be cautious of, this word greenwashing, and not it just being a short-term pop, but it being more of a developed strategy and thinking long-term to integrate policy. So thanks.
Yeah, ESG is a tough one because of the lack of clarity on standards. And it kind of takes issues like Chance was just talking about and make it some number or metric as opposed to a change. And I wonder, and I was going to ask Chance this question, do you think the politicians are adding to the problem or helping it right now? Because I worry about the political divisiveness making things worse, not better. So how do you think about that?
Well, I think that, as we've been approached about, let's take the voting rights issue, the bills that are before the Senate right now, we've expressed that there seems to be a communication problem. I think one thing that among the many things you could say about King, he had a gift for making things digestible and simple and clear. And, in my view, this entire Voting Rights Act and re-enabling the original act and what does it allow for the Justice Department to go in and examine policies that have been passed at the local level? I mean, I'm a lawyer, and this stuff becomes very complicated. And so we've expressed, you have to keep this simple. Let's simplify the story. And so you may have noticed that there was some commentary from the administration just in the last couple of days where they tried to quantify what if we continue with the restrictions that have been imposed at the local level and seem to be, on track to go wide across the country, how many people who voted last election would in theory be prevented from voting this time around? They're quantifying that. That was a suggestion we had, because until you can actually say 10 million people are now at risk of not being able to vote, then that gives me, now I have something to hold on to. But if you're just talking about how racist the Republicans are or whatever, name calling and all these things, it just doesn't go anywhere. So we try and, our first step in the nonviolence philosophy in the strategy is, we don't comment on day one. We typically do our research first so we can understand the issue and then come back with a meaningful response. And so I think that's our charge to the political establishment. Let's give people meaningful information.
Chance, you promised to come back more, right?
I will.
This is recorded, so I just want to make sure everybody. I'm using what Jack Wyant does to me.
Yeah, you baited me, man. I'm now it's on the record. I would love to, and I appreciate the platform. I think yesterday was, we did have the vice president speak at the Ebenezer Church service, and we also had some Republicans speak. And I think the more we can actually talk about the issues and give the information to people in a way they can understand how it affects their own lives, that's the key. But this name calling and all that nonsense, I think we'll get nowhere. So that's the hope. In 2022 we can have meaningful conversations. I appreciate you having me, Mark.
I know you have a hard stop, so thank you.
All right, appreciate everyone. Thank you.
Thanks, Jens.
So Stephen threw out a lot of data to us, and any other questions on these aspects that Chance Stephen just covered, or others? Don't be shy.
Everyone's anxious to get to Naples, start playing pickleball.
Well, the problem is Stephen's goal, if we were to analyze his behavior and not ask him his goal, it was in all likelihood obfuscation. And therefore the silence is a derivative of the obfuscation that he most successfully accomplished. And I think, however, we're supposed to have a positive view net of all of that stuff.
Oh, no, not all of it, Jack.
Well, Stephen, you are starting to back off on, inflation being moderate. I mean, it looks like it is cranking up.
I'm still in the camp that we're peaking on inflation now, so that hasn't changed.
Well, we would prefer that view, so let's hold to it then.
Okay.
John,
I don't think that's how you get there, Jack, but we'll see what we can do.
Yeah, so Mark, I think it was
ahead,
great. It's great that you had Chance on, and obviously very appropriate week in which to do that. I agree with Rob and with Stephen that greenwashing and lack of uniform standards for what is ESG is that's a challenge. That's a really big challenge. And maybe it's an even bigger challenge for impact companies to come up with a combined for-profit impact model that moves the needle. Like, so if we're saying that the private sector has the ability to more forcefully put its shoulder into the wheel to address some of the countries in the world's biggest problems, that requires impact innovation. And I think one of the challenges is is the private sector fully realizing its potential to do that. And so I would also nominate that as a great challenge for the impact economy.
It's interesting. I don't know if anyone's read Larry Fink's letter that he put out, but he's taking on kind of the transition to affecting the transitions that we need to make, and getting skewered for, because he's being honest about it, takes playing both sides of it to get there. So in trying to be a leader for stakeholder capitalism, he's getting skewered for being a leader in stakeholder capitalism. So it's a fascinating dynamic. It's one of those you can't win, but part of this is that you can't get to the energy transition without still using fossil fuels to get the transition right. And we have to find a better balance in the conversations. But I thought his getting skewered for being honest about how difficult this is for companies and for us, for managers as well, to make this transition is really going to be interesting to see how that plays out. We did an exercise. I pulled up one of their ESG funds and compared it to our flagship strategy for the top holdings, which we don't do a formal ESG overlay on. And you can't get away from the 15. The top 15 looks like almost any US equity portfolio in names. So there really is not that much differentiation between the ESG top holdings and almost any portfolio in the US's top holdings right now. I think that's the problem in the public markets.
But part of, to John's point, I think if you're going to make real impact, I mean, you can make an impact there, but that's still not. It's a company like John's. It's venture is where we're going to really make this impact. So that's why we're dedicated to getting a portfolio of venture funds and companies that will be most impactful. But people like Aaron have to measure it. And yeah, I remember our first impact event 4 years ago. The question to the panel was, how do you measure impact? And we had like 6 panelists and 6 different answers. One was, but now we've got the measuring crews coming, and if you look at our YouTube videos on these, we've got some good people, but it's still not uniform. And I was actually curious. I think Chance answered a different question than you asked, Stephen, but I'd be curious to have his view on how to advise companies, public or private, to engage and answer that question. But I'll pause.
Can I ask John a question? John, at Kleiner,
Yeah.
You guys did the work on impact pretty early, right? That was your baby back in the early 2000s, as I recall.
Yes.
How do you view the progress from then to now, and what do you think needs to change?
Well, it's a great question. I'll a lot of paradoxes in the world today, but let me report first just the breathtaking sea change that's taken place in the markets. And Stephen, you and I have talked about this before. I call it the triple upshift, where there's been a breathtaking shift in consumer, investor, and worker demand for impact that's put enormous pressure on companies to at least declare ESG. And I think that's why the Business Roundtable did a 180 on Milton Friedman 2.5 years ago. From shareholder value, no, we're for stakeholder value, changed our mind. And so the suddenness and the dramatic nature of that shift in the data statistically is, as I say, breathtaking. And on the other hand, the world's biggest problems are big. And so it's, and the existing ways of addressing them have been insufficient. But they're massive, massive problems. And so it's going to take a lot more, I think, from the private sector to, like I said earlier, fully put its shoulder into the wheel. So amazing shift endogenously from the market. That wasn't an external event. That was consumers and investors and younger workers saying, no, we want to have a career combining paycheck and purpose, or we want to make an investment that, or we want to buy the product off the shelf. And in the data, that's overwhelmingly shifted. And there's so much more that needs to be done.
Thank
Hey,
you.
I just want to add a couple points, both to what John said and to Stephen. I think, Stephen, when you're talking about, the top 15 companies being, in everybody's portfolio, I think the real way when you start looking at it is actually do sector analysis, right? So that you're looking at how a company adheres to the ESG metrics according to their sector, right? Because an energy company should be judged differently than a healthcare company versus a technology company, et cetera, especially when you're trying to match them up to the UN SDGs, right? Which is, for lack of a better framework, right now is the one that's most popular, especially in the S category where we do our work. So I think the real key there is sector analysis, and so that you're comparing like companies to like companies. And to kind of what John was saying, the point I was going to mention before is that you're really seeing a convergence, right? So you're seeing top down, from the CEOs, because they're starting to have their pay being, matched or mapped to the ESG targets. You're having employees for sure, because they're the ones who actually understand the culture that's going on in the organization. And usually there's a pretty wide differential between what the C-suite thinks and their sort of aspirational values and the actual values of the key stakeholders like employees. You're seeing consumers come in from the side, and then you're seeing the board come in with their own mandates according to risk management and strategy goals. And so I think that's where it becomes very interesting, is when you're taking a look at all the stakeholders involved, being pushed primarily by the investors who are, trying to make some sort of differential and kind of wade through the greenwashing that's going on. So I think that's where it becomes very interesting, is when you take a look at a measurement device that's looking at all the stakeholders and how they're actually weighing into ESG and affecting the outcomes of an organization.
Aaron, I think it's a great point to look at sectors separately, because you can't have the green revolution without the commodities that are required for it, which are really dirty to get out of the ground. So do you vote them as green energy positive or green energy negative? And we're going to have those conflicts that we're going to have to deal with for quite some time. And that was part of what Larry Fink was trying to point out, is we're not divesting of fossil fuel companies if they're essential to make the transition work, because you need the energy to get there. And that's part of Europe's problem right now. Is what did they, a couple of weeks ago, they shut down 3 of the 6 nuclear facilities in Germany. But they're not ready for the other stuff to back it up. They're waiting on, natural gas from Nord 2 pipeline and all that. Those mismatches are what we have to work for. And I think, to John's point, they are long, big problems that require long solutions, not quick solutions.
And
I think
With
that's
Aaron
Yeah.
also, sorry.
Let
Go
me,
ahead, Jenna.
let me
Go ahead,
just
go ahead.
build on these.
I'm with Aaron also on identifying the sectors. And really, if you want to identify companies that are innovating, who are small, who are below the radar, there's data that can identify them. And so doing it on a sector by sector basis and raising awareness of what they're doing to the larger entities, to countries, I think that that's a helpful thing to do. So I just wanted to echo what Aaron's saying and take it in a slightly different level.
But hey, John, I mean, just we talked about this in New York, to those last 2 points, and Steve's points of the top 15 funds being kind of similar now. The point of Fink from BlackRock in more aggressive approach, wouldn't you say some of that is just him being a little bit disruptive to differentiate him from, because at the end of the day, he's got to serve a lot of these LPs that are kind of going by this beaten drum. That's hitting all the top 15. That's why they're a little bit more similar.
It's over 500 billion of 10 trillion of their assets now. So he is kind of talking his book a little bit.
So Rob, really good point. One thing that I've said in speeches that I've given is I think it's very challenging for a publicly traded company to really move the needle on ESG, because they're a little bit, a lot of it caught between a rock and a hard place. So the rock is the ESG pressure from the markets, and the hard place is the short-termism of the public equity market. They promised EPS of 34 cents a share next quarter. If they don't deliver, the CEO may lose her or his job. And so you have this friction, this tension in public companies that makes it very, very, very difficult for them to actually move the needle on ESG. And that's not as true in the private sector, because there isn't the degree of short-termism. Now people are working on permanent capital and so forth to relieve pressure on that. The other, Stephen, to your point, a way to relieve the pressure on the conundrum of, well, how do we do the transition without doing mining of the, everything that's needed to create the green revolution. And I think there's overwhelmingly in the people working on climate solutions, there's been a focus on the reduction of future emissions, solar panels and wind and batteries and so forth, which is fantastic and very necessary. But there's also, I think, an underexplored category of the sequestration of historic carbon that's in the atmosphere today. And the soil is, those of you that know me at Shared X, we're doing something about it through regenerative agriculture, sequestering out of the atmosphere by increasing the carbon cycle of plant in a very healthy non-GMO way. And there are a lot of other opportunities like that that are underexplored. And I think, again, the private sector has a great opportunity.
And then the public companies will buy them into their portfolio, and then they'll be mixed in whether they can be rated as ESG or not. So.
Jim Hawk, hand up.
Hey, so Stephen, interested in your view here. So I often think that there's a subtle but a real difference between ESG and impact. And the way that I kind of think about this is that ESG is almost do no harm, and impact is actually kind of proactive addressing of ways to mitigate some of the climate risk and whatever else surrounds impact. What do you think that there's some term of art here in terms of how the markets view the difference between impact as a term and ESG as a term?
Well, I do, but there's many people on the call better able to answer this, starting with John and some others. But my take on it is ESG is kind of following loosely laid out guidelines as to what qualifies in each one, and impact is around those three categories, where impact is just making the world a better place for me. And I think it very simplistically, and I think a lot of companies are making impact and don't get credit for it, but others not to the degree that the specificity that John is. When you hear John with his, and John can tell you very clearly, they have a couple things they're focused on when they're doing what they're doing. And I think that's going to be the difference. I think ESG is just too many different elements in it in one category to me to be easy to report. So I'll turn it over to John to give his take on it. He's closer to that than I am.
Yeah, I agree. And I think one of the, and others have said this, so I'm just parroting what other smarter people than me have said in this call, is there's a lack of common currency in broad impact metrics across every sector, which is why people are saying take it sector by sector. So for example, what's the relative impact value of an avoided gigaton of carbon in the atmosphere against lifting 1,000 people out of poverty? Well, that's in the eye of the beholder. And so I don't think there will ever be common agreement on how to quantify those, because that's subjective, and different people, for good reasons, have different opinions on the relative importance and value. So that's one. The other is in finance. Everybody knows that the classical way to value a company is its discounted future cash flow. And in impact, we're not doing that. I mean, that's not the discussion. It's rear view mirror, which means for a very early stage impact company, its impact value is zero. Even if it has some very breakthrough technology or innovation or whatever that has great promise, it's valued at zero because there isn't a discounted impact flow concept, which it brings its own challenges. How do you quantify that? How do you come to agreement? But just the methodology is different, and maybe it should be. But so those are some of the great challenges that have created the problem of coming to a uniform set of impact metrics.
Yeah, John, I'll emphasize your point. I was actually looking into this like 30 years ago when I worked at BGI, and it was as much a morass back then as it is now. And so much of it is policy preferences. Some people have an emphasis on this, some people have an emphasis on that. They can't agree on which one is more important. But to the impact point, if you look at what the people at Mars, for as an example, have done with their kind of economics of mutuality concept and trying to develop that, their pilot program in that area was specifically designed to realize those cash flows like up front. And it was a very business driven decision, but it also had a greater good component, to it. And, there they realized, meaningful business increases in sales and profits. And at the same time, we're being able to lift communities that had been literally ignored, out of poverty. And this was a pilot project that was done in Africa. So I think that well thought out, impact programs and opportunities can really make very meaningful differences. And on my scorecard, that's where it counts, because you have people receiving tangible economic benefit that perhaps hadn't done, that wouldn't be able to do so otherwise if it had not been for that initiative. And I think that's where the rubber meets the road, and where there is so much wonderful potential.
Bill, the interesting thing from when you were looking back then to now is what is being measured now versus then. The social responsible investing back then was really around vice stuff and the big pharma. Now it's a completely different direction. So you want to just touch on that a little bit? And you've looked at it for 30 years. It's very different now than it was back then.
Yeah, I mean it's different, but there's a lot that's still the same. Because I think, once again, I think forgive me for being a little cynical, but I think a lot of ESG is again policy preferences. Certain groups would like to see this as opposed to that, and so it becomes difficult to measure those types of things. How do you measure that benefit? It is as much a problem now as it was back then, and you had back then you had a lot of groups trying to obtain shelf space on the podium in order to get their agenda put forward. And all fine and good. It's just that my report back to the president of BGI is that we're going to please some people, or we're going to please nobody all the time if we try to go down that. And and ultimately probably not the best for our investors.
But just one thing there, Bill, is a company like Mars, the core product at the end of the day is candy. And, I think this is part of a correction of their model. They've gone into things like pet foods and more healthier areas. But some of that is like some of the tobacco companies, or even some of the beverage or the liquor companies, in terms of improvement, in terms of they needed more balance of their offerings. So I'm just saying at the beginning of it, there's a little bit of a bias toward the need to change, just given the core product offering.
Yeah. I mean, certainly, one could take issue with that, but I think more importantly, and if you talk to them, and I think also at the front end for them, it was to serve as a template for how could they build out their business better, and have a broader impact, both financially as well as socially, if you will. So I think it's one of those things that's sort of like, here are the instructions, insert A, B, or C, whatever you want. It's sort of a mindset and a process that they've been able to put together that can be replicated in other sectors. So, point well taken, point well taken. But again, I think the emphasis there and the takeaway is the template that they've been able to put in place.
So we put in the chat, like a lot of these subjects, the nice thing, we were just doing our 2022 predictions. I'm able to go back and see what someone predicted a year ago. We never recorded our sessions. We're recording everything in Naples and Miami. We record, and now we can look, it's also transcribable to see all these great messages and learn. So measurement has been, it was a question 4 years ago. It was a little panel last year. Let's do a 2-hour dive on it. We got very smart people. Now Aaron's in the conversation. We got, we talk about transition energy. If you saw what, it was the closest thing, we're always so cordial here. It was the closest thing to like a disagreement, God forbid. Valerie Rockefeller, no fossil fuels. Eric Lindbergh, I'm not going to take 30, 40% of the stocks off the table to establish my returns. And what's the measurement? Let's say it's carbon footprint savings. We could take 5% with a natural gas to gasoline conversion company that is in our orbit. So just as is name calling, I just think we just have to have like a, constructive approach, but informed approach that, like, I think now we're better informed than 4 years ago. Mike White, I just saw you jump on camera. You're doing a lot of impactful things. Did you come on camera to share something? And I know Julie, you're on camera and off mute, so maybe you want to share as well.
I've just enjoyed the conversation, and John and Bill and Rob and everyone's contributions, and the gentleman who was on earlier. And I think the issue of common currency is really the issue. If your social impact thesis is to provide more economic opportunities for Black Americans, how do you measure that against reducing carbon footprint? They're really separate issues. And I think John pointed out something that's fairly important in that a lot of this is in the venture space right now, and it's hard to measure from a discounted cash flow standpoint. And it's also, it feeds into something that he recognized, the sea change that's taken place in the past 3 or 4 years, is you have one incremental improvement at a time. And as a venture investor, I sort of look at it, as a venture investor, I sort of look at it as, you invest in one Black founder at a time. You invest in one, environmental improvement like natural fiber welding that we had that replaces plastics with plants. But then you feed into, an ancillary, externality that may have some negative consequences for the environment. For example, we use more cotton. So how do you make cotton use less water, use less nutrients? Yeah. So it's a very difficult thing to measure. But I think, I think Potter Stewart was the justice on pornography. I kind of know it when I see it.
No,
but
I know. But I was gonna. That was the quote. That was the answer. One of 6 panelists' answer 4 years ago, and I wanted to say that we could do better than that, and we can't.
Agreed.
Yeah. Sorry, Julie.
Yeah. Sorry, I have to drop in 2 minutes, but super fascinating discussion, and I find it interesting that there's so much focus on the E in ESG, and the S and G doesn't get the same attention. And then when you sit back and look, we're investing in solar panels and wind farms, but where were those created? Places with child labor and forced labor. I mean, is everyone looking under the covers of what is the overall impact of these dramatic shifts?
That is such a great comment, Julie. Can I build on that?
Please.
I think that's right. And I've been swimming in these waters for the better part of 20 years. And what you say is true. And none of us is diminishing the E in ESG. Just to be really clear, myself or you, Julie, that's mission critical. We've got to do that. But what about the S? What about the G? And why don't we see more of that? And here's an interesting thesis, which is that all three are interconnected to a very important degree. And so, for example, Jane Goodall published a book a few months ago called The Book of Hope. And in it, she observed that when she first went to Tanzania to save chimpanzee communities, she realized quickly that she couldn't achieve the mission unless the poverty of the local indigenous communities was alleviated to some degree, because they were killing some chimpanzees for the value of the skull and cutting down the trees because there's value in timber and so forth, but there was extreme poverty. And so we see that at SharedX too. We work in remote areas of emerging countries, and we're trying to deliver a double poverty climate solution because the two are integrated. And if we want the soil to sequester more carbon from the atmosphere, now we need smallholders to come and go regenerative, because they grow 70% of the world's food. So there's now a growing recognition, not only where's the S, where's the G, but also if we really want to optimize for E, we need the S and G to come along.
Agreed. Sorry, I need to
Well,
drop.
look, these themes will continue, and you know, but we're about to script out the 5th Impact Summit. So, and all of you, you know, this is open architecture. So whatever subjects interest you, you know, lean in, you know, help form that panel, breakout group, and each of them also could be their own deep dives. So, you know how we roll. If
It's a great start off, a launching pad to the discussion though today, Mark.
yeah, I always like to say this catalyzes this and that. So I like to see it happen. You know, for some of this, like you were talking about, you know, Jim Hawk just did social equity in the cannabis world, right? Really shed light on that. It also catalyzes getting people like Chance in, which was great, right? And I've been asking him to come for years, but I want him to be our publicist for 361 or for our community. He's got a great, smart approach. So what, you know, I didn't, at the top of the hour, I didn't advertise that we, you know, some of you know about Naples and Miami. There will be an impact panel. There will be a optimizing philanthropy panel. Has a lot of, that one, the impact will have Tyler Wood, and they have a negative carbon footprint green bond that they're raising at the moment. I know that Ari Kaufman, who's as the water, you know, sort of democratizing the measurement of lead and water, will be speaking, and others. You know, Eddie Bonaparte from Impact, from Virtue Capital, will be there on philanthropy. It's going to focus on human trafficking, and I've been doing these interviews. And so, who was it today? Was it today? Or no? Oh, yeah, Erica Lill. What she's supporting, and I invite everyone to share it because it's really helpful, is girls who sort of graduate out of foster programs to help them with their transition, which touches on human trafficking. It's sort of, there she is.
Hi.
By the way, Erica, I couldn't save it. I couldn't share it because I need you to change your privacy settings so I can download it.
Yeah,
But
I did it for you. Thank you. So sorry to be tardy.
No, you're good. You have the same background for your video. What do you know? But what I want to do is, like Rob Horowitz has a foundation dedicated, interestingly, to 2 things: foster care and criminal justice. It's called the Horowitz. He's actually a Michigan grad, John, and Red Lick Horowitz Foundation. So I'm just trying to interconnect our world so we can, if you know what everyone's focused on, we can be, you know, more magical and less dysfunctional, and more efficient.
It's a real problem. If these girls, you know, at 18, there's some terrible stories. There's a story, the woman runs it. A girl came home from school after her 18th birthday. The family moved, just literally moved. She had no place to be, nowhere to go, didn't trust the system anymore. So this adds to our homeless problem, our criminal problem, adds to a huge problem. Or with a little bit of help, we can, you know, potentially have some really productive citizens in our society. So that's all.
And it's holistic, right? I mean, giving them a home or housing is one thing, but they need mentors. They need roadmaps, education, skills, and, you know, it's interesting, so mentoring is so key. When we talked about mental health, so all these things are interconnecting to partly what John was saying. And
Thank you.
anyone else? And thank you for doing that video. It'll go up by tomorrow.
Oh, thank you.
Erica.
Hey, Mark.
Jack, you going to do another 20-minute, 5-minute interview?
Hey, Mark, keep in mind that as you talk about various resources that have become members of your extended family, we've got the ambassador of hope, none other than Andre Norman, who spoke at your gathering last summer, and as a result of the relationship is in essence standing by to play a role going forward.
Yes, he was great. He was the one who threw me off because he wouldn't accept my help until I accepted his. What a concept. And here I am at the airport. I just dropped off my son. It involved my son, who's on a great course, but Andre was there to be helpful. I would love to do something with him. So Christy,
hey,
come on
Mark.
camera. This is our time, but this is a community. This is really fitting that you come. Can you just introduce yourself? This is our weekly 11 o'clock that always runs over.
Oh, I'm so sorry, and I'm in a hotel room, so I have a very weird Zoom.
I'm in an airport. It's okay.
There we go. Yes, I'm Christy Kiekler, and hello. I'm sorry, everybody. I didn't mean to jump at the end of your conversation, but I've known Mark. I've been president of IPI. I was at Family Office Exchange and at MFOs, and have worked with families and family offices for a long time.
Yeah, no, Christy's the real deal here, guys. She's been, among the top-notch advisors across the space. So, and you have a new gig, Christy. Do I understand?
I do, but I'm going to tell you first, Mark. So.
Okay. Oh, good. I get to know first. Okay. Well, this is what we do. We get together, and someone always kicks it off, and then it goes in winding roads. But the theme today was the diverging global economy. So I'll sum it up. We had Chance Patterson from the King Center talk about, because one of the parts was inequality. He talked about MLK's legacy and going forward, which led us to voting rights reform, which led us to ESG, which pivoted to measurement, which to the energy transition issues, and I summarized that all of this is for our community to lean in, whether it's through a summit or a deep dive or whatever we want to do to shine a light. And then I was making a shameless plug for Naples and Miami, where many of you will play pickleball for the 100th time or first time.
Mm-hmm.
And welcome you all. There'll be instruction on Saturday for those who's first time, and then we'll have impact, we'll have philanthropy, we'll talk about what's happening in Naples. Stephen Burke will kick it off on 22. We'll talk about NFTs and art, then there'll be a dinner. Next day will be a blockchain extravaganza panel, pickleball, Miami, reception on Sunday. Monday, we have 2 to 6 roundtables and reception, and there may be a lunch at Fontainebleau as well. So thank you, everybody.
Mark, can I say one really quick thing?
Yeah.
I listened this morning to Jim Grant is a friend of mine, and in Current Yield, his podcast, he's interviewing the author of Lords of Easy Money, who's incredible to thinking about a macro. If anybody wants to get terrified about what's coming on the macro side, I suggest they either read the book or listen to Jim Grant. And what I'm doing, my next gig is very much in the values aligned space. And I couldn't agree that measurement is more important. So great things you guys are doing. And thanks for letting me pop in the last 2 minutes of your call.
Hey, Mark, ask Christy if she'd be kind enough to do a summary for the group this weekend.
Well,
and then we can promise her that we'll read the book after her summary.
If you listen to the podcast, you'll get all the big themes, so you don't have to read the book.
But what if we'd rather hear it from you?
I could do that too. It's all good.
Well, we are going to have it streamed. I have my videographers down there, but we, you know, maybe we can twist around and get you down there. But it's or at some other point we can do it, and or we can invite. What we like to do is go right to the source, have him come and interact with our community on that subject.